Welcome back to another episode of the Micro E Mini NASDAQ AM session. I would like to preface this video by saying before we begin, please understand this content is provided for educational and informational purposes only. I am sharing my personal market analysis and trade review, not financial advice or trade signals. Trading involves substantial risk, and you are solely responsible for any decisions you make in the financial market. So yesterday before market close, we were somewhere up here before I submitted the video around like noon, and I said the buy side liquidity pool for the remaining of the day would be this target up here, these relative equal highs. This high is lower than this high, but they're relatively equal, so that makes that a low resistance liquidity run. So I had that marked out for you. The market did trade up and take that out before market close, and then we traded lower. I guess you can call this the Asian session. We started swinging higher in the London session, and then what we'll do is the first thing I want to talk about is the 5-minute chart. So I recorded my live session. I will submit that also, but I want to show you the previous day gap that we have. I don't know why it's pulling from that far, but the previous day gap is this gap here. So from this candle's open to this candle's close, that's the previous day's gap. So that's Wednesday's regular trading app that we ended up trading back down into. And then what I'll do is I'll go back out to the electronic hours. Let's just work off the 15-minute real quick, please. So we'll see this fair value gap here, these equal lows here, right? And then what I did was I just filled both wicks. So I took this wick here, I put a fib on it, and then I took this wick here and I put a fib on it, and then you will see the quadrant levels or the gradient levels, and then you will see this level here, and then you will see this level here, these equal lows, and then the 5-minute also encapsulates the previous day new day opening gap, which is the close at 4 o'clock, 4:15, 4:30, and then the 9:30 open. Then what we'll do is we'll drop down into the 1-minute chart real quick, and then what I'll do is I'll bring in my 2-minute, so you can have perspective from both sides. On the right side just has the higher time frame downside objectives. The 1-minute chart is pretty clean for execution purposes, and I just reference both, right? And also have 4 additional monitors. So what you'll see is stuff like this. So here we have the new week opening gap here, and then this new week opening gap here. So as we're trading down, I'm looking at how we trade at all of these levels, and also encapsulating how we trade at all of these levels, these new week opening gap levels. So we get into the 1-minute chart, right? And then what I'll do is I'll drop a vertical delineation on 9:30, which is here, right? And then as you see, we see a lot of consolidation, no heaviness, a lot of back and forth, and then we get our first true displacement after the consolidation here. All right, so this is a fair value gap coupled with a swing high. You know, on this this page or this YouTube channel that the flagship entry model with correct directional bias is a fair value gap with the swing high. So this is pretty ideal here. Entry will be here, stop will be here. True 2-to-1 was overly shattered today. So say about 41 handles, so you're looking for about 82 on the downside, which was shattered. I think the low came in at 350 handles. All right, and that's if you were to scale out at some of these logical areas, the 15-minute fair value gap, that 15-minute wick. So we traded down into that 15-minute wick. Let's bring the 2-minute in real quick. The 15-minute wick high. I know I was teaching someone last week, and I was telling him about how he should trade wicks, and best case scenario is if we run out the wick, because then that's you running out the sell side liquidity pool, which is a completion of a buy or sell model. But majority of the time what you'll see is you will lose a lot of trades expecting that, so you want to kind of grade out. Personally, I grade out right at the first quadrant of the wick. So if I'm grading a wick, say I'm grading a down wick, let's just pull it up real quick, sorry. So for a 15-minute wick, this wick right here, if I'm trading down into that, I'm looking to get out right at the 1 level. Or essentially, if my fib is correct, it'll be the 0 level. I'm not looking to get out at the lower quadrant, consequent encroachment. Upper quadrant, consequent encroachment, lower quadrant, or the low. I'm looking to get out right at the high of the wick. Low hanging fruit. Majority of the time, it's going to tag it and go run the other way. Or sometimes it'll trade through it, but I know for sure that it should tag it. And I want to put my limit order right above it just so it can get tapped out in time. So this was the AM session. Pretty smooth once you got through the back and forthness in here. But if you know what you're looking for, displacement, fair value gap, stop here, 2 to 1. If you were to hold 4 additional lower levels, obviously you crush your risk to reward ratio. Hopefully we can start back moving around. I mean, it's almost the end of. Got 2 days. We got 1 day left. Friday's not really that great. We got 1 day left for trading for the month. Hopefully March give us some nice ranges for the month so we can continue to get out this data consolidation. But if we do continue to consolidate, I know this has, let me go back to my 30-minute real quick. If we do continue to consolidate, just look for price action moves to be pretty much what we've already been seeing. Running out highs, returning back into a range, and things of that nature. Returning back into a range, running out lows. So if you need help with directional bias, stick around. I have some higher time frame top down analysis for you going forward to finish out the week. Until next time, talk soon.